everybody, how y'all doing? This is Dave, and what you're looking at here is a 3-month chart of Advance Auto, the symbol's AAP, and what I'm going to show you today is how I use stop loss orders. Now, y'all know I'm always talking about to use a stop loss order, and I'm going to show you a trade I took and where I put my stop, and we're going to talk about it a little more. So first of all, this is a 3-month chart, Advance Auto Parts. You see several lines here. This is a longer term uptrend line. This line here goes all the way back to May the 5th, right on up through today, July 16th. Here's a smaller uptrend. This would be resistance. You can see here where these two candles came up to almost the same price, pull back, that'd be resistance. Over here you got support. Over here you got more resistance. So what I did, I set an audible alert to go off at 52.34. That's this white line right here. So at 52.34, this audible alert, pops up and reminds me that price is crossed above 52.34. So I start watching it. This right here, this was the 13th, which, let's see, that was Tuesday. I didn't do anything then. I was busy Tuesday running errands, had to, go in and out. So I don't like to trade if I can't concentrate 100% on what I'm doing. So I watched it. Okay, here's the next day, Wednesday. This right here is called a doji. Here's the next day. This is Thursday, the 15th. I took an entry at 52.50. And you can see this dotted gold line right here. That's 52.50. That's just to show you where I took my entry. I took my entry right here. Now, I didn't go in right off the bat with 500 shares or 1,000 shares. I didn't go in right off the bat with 300, 200. I didn't even start with 100. I started this position with 50 shares and a $2 stop. Let me get that out of your way. Now, it's common for me to do this, especially when the market is like it is, and the market is overbought. It's been going up on bad economic news, so it's time for it to pull back a little bit, and I was well aware of that. So I took this entry with a small lot, 50 shares, and a $2 stop. Now, I'm a very technical trader. 99% of the things I do are done for technical reasons. But a lot of times when I take these little small lot entries, I'll just throw a $2 stop on it. And this has no technical reason other than it's a $100 maximum exposure. So you can see this line right here represents my entry, 52.50, with a $2 stop down here at 50.50. Okay, and that's all that is. That's just a $100 risk I'm taking. There's no technical reason behind the stop. There is a technical reason for the entry. Now, the reason I did that, like I said, I've been watching economic indicators like CPI, unemployment numbers, consumer sentiment, stuff that really moves the market, stuff that really matters. And I knew that the market been going up, like I said, on bad news, so it's just a matter of time. Well, as soon as I took my entry yesterday, this is Friday. I took my entry Thursday. Here's Friday. We got the ES lost 27.5 points. So naturally, my stock is going to get pulled down with it. Well, it came down here to 51.34. I got in at 52.50. So let's see, 52.50, 51.34. That would be $1.16 loss. 50 shares. That's what's that? $58. Yeah. Okay. So let me show you something here. Text note. What I want to show you. I'm not going to lose any sleep this weekend. over this trade, and right here's why. $58. Right now, I have a loss of $58. So like I said, I'm not going to lose any sleep over this trade. Now, Monday morning, when the stock market reopens, if it continues to sell off, I will probably get stopped out. My maximum loss is going to be $100. Okay, I can live with that. So that's why you always use a stop loss order. All right, now let me talk to you about one other thing, and that's averaging up and averaging down. A lot of traders, when this stock comes on down here, they'll add more, and if it comes on down here, they'll add more. And what's going to happen, or what can happen, you get down here and you're down $2 or $3, and you say, okay, I'm going to average down. I'm going to double my position. I'm going to cut my entry price, my average entry price, in half, because I'm going to double my position. And then the next thing you know, you lose another $1 or $2, and then you're like, oh shucks, I'm down $500. Now I can't afford to take a $500 loss, so I'm going to add some more shares. Well, where are you going to draw the line? Huh? Are you going to get out at $1,000 loss, $2,000, $3,000, $4,000? Where are you going to draw the line? Well, look right here. I'm going to be out at $100. Right now I'm down $58. When it gets to a $100 loss, I'm out. It's over. The trade is done. Kaput. Nix. 9. Over. I'm out. You're going to be down here sweating bullets because you kept adding and adding and adding, praying, hoping it would come back, and for whatever reason it didn't. I got out up here at 100. I've done moved on, and I'm in another trade, and I done forgot about all this. Okay, here's what I do, folks. If this stock continues to move up, when it breaks this high right here of 53.21, I'm going to add some to it. Yes, I'm going to add shares to my stock when it is above my initial entry price of $52.50. I'm going to average up. If this stock continues to show good strength, which I feel pretty sure it will, because the auto parts sector is really strong right now, I'll add some more shares. That's called averaging up. And your average cost per share does move up. From this $52.50, it will continue to rise, but you're adding more shares. You're moving up. Excuse me. And I get a decent profit. I'm out of here. Okay? So that's why you use a stop loss order. That right there is a perfect example. I got in right here. The market sold off 27.5 points. It pulled my stock down with it. If it continues to sell off, I'll get taken out. My maximum loss will be $100, and I'm out. Hey, I say this all the time, but I want you guys to know when I say it, I really do mean it. I want you to make a lot of money. I want you to be successful in the stock market. I really, really mean that. And this is one tool that you can use right here that will help you become successful. Use a stop loss order. I hear a lot of people talking about, well, I don't use stop loss orders, but I use mental stop loss orders. Mental stop loss orders, that is BS, okay? That's BS. Because what'll happen, let's say you got a mental stop right here. It'll get down here and you'll say, well, daggone it, I think it's going to maybe come back right down here to this little support level, then it's going to pop up. So you'll just keep mentally moving that stop. That don't work, my friend. That does not work. I see people get kicked in the nuts all day long because they won't put in a stop loss order. Put your hard stop in there. Do not move it. Leave it where it is. Go ahead. Take your loss. Get taken out. Be done with it. Move on. Hey, I tell you what, I want y'all to make a lot of money. I want you to have a good day. Have a good weekend. And I will talk to you later.